For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. This week, several influential technology companies based in Silicon Valley released their financial reports, drawing intense scrutiny from investors who focus on artificial intelligence. With artificial intelligence dominating the stock market discussion, investors are paying close attention to earnings, revenue projections, and company strategies to determine which firms are positioned for long-term success and which may struggle to meet the ever-rising expectations. Among the most closely watched companies, Nvidia has been a standout in the artificial intelligence sector, playing a crucial role in powering advanced computing technologies. Despite reporting what appeared to be strong financial numbers, Nvidia's stock took a hit, declining by over 8% today. This reaction underscores the market's high expectations, where even solid results may not be enough to sustain momentum. During Q4, the company's revenue surged by an impressive 78% compared to the prior quarter, reaching $130.5 billion. On a year-over-year basis, the growth was even more striking, with revenue climbing by 114%. While these figures highlight the company's continued dominance in the semiconductor industry, it is worth noting that this rate of expansion represents a deceleration from Q1, when revenue had actually tripled. Beyond top-line performance, Nvidia's financial outlook raised some concerns among analysts. The company's guidance for its gross margin came in at 71%, which was slightly below Wall Street expectations of 73%. Given Nvidia's critical role in artificial intelligence infrastructure and its status as a market leader, any signs of slowing growth or weaker than expected margins can lead to heightened investor uncertainty. Another major technology player, Salesforce, has been aggressively investing in artificial intelligence to strengthen its position in the cloud software market. However, despite these efforts, the company faced setbacks after releasing its latest earnings report. Following the announcement, its stock declined by over 4% today, reflecting investor disappointment. Salesforce managed to report earnings per share that surpassed expectations, but revenue came in slightly below projections. The company posted $9.999 billion in revenue, just missing the anticipated $10.040 billion. This shortfall, while relatively small, contributed to concerns about Salesforce's ability to drive consistent top-line growth amid increasing competition in the enterprise software space. A key component of Salesforce's artificial intelligence strategy is its second-generation Agentforce artificial intelligence platform, which integrates with Slack to provide automated responses to employee inquiries. However, the technology has not gained as much traction as investors had hoped. Executives stated that Agentforce is expected to make only a modest contribution to the company's revenue, and even by the year 2026, it is unlikely to be a major driver of financial performance. This tempered outlook further contributed to investor uncertainty, as artificial intelligence remains a critical focus for Salesforce's long-term growth strategy. In contrast to the challenges faced by Nvidia and Salesforce, data analytics firm Snowflake delivered a more optimistic financial performance, providing a boost for artificial intelligence investors. The company's stock climbed by over 4%, reflecting strong earnings and revenue results. Snowflake not only exceeded expectations on both earnings and revenue, but also provided an encouraging forecast for its future growth. The company projected that its product revenue in the year 2026 would reach $4.28 billion, representing a 24% increase. Additionally, Snowflake announced a major technological milestone by integrating its artificial intelligence platform, Snowflake Cortex Artificial Intelligence, with OpenAI's model. This integration underscores the company's commitment to artificial intelligence-driven data processing and further strengthens its position in the rapidly evolving artificial intelligence ecosystem. Despite some turbulence in individual stock performances, analysts remain largely optimistic about the future prospects of Nvidia, Salesforce, and Snowflake. The consensus among professional investors continues to lean toward an overweight rating for these stocks, indicating confidence in their ability to deliver long-term growth. However, the landscape for artificial intelligence investments is becoming increasingly complex, and companies will need to demonstrate sustained performance to justify their valuations. One major concern for Nvidia investors is the emergence of competitive threats from Chinese firms, particularly DeepSeek. While Nvidia has largely dismissed fears that DeepSeek's latest semiconductor technology could make its chips obsolete, the fact that a relatively small Chinese startup achieved such significant advancements with limited resources has unsettled investors. Beyond competitive pressures, external economic and political factors could also pose challenges for artificial intelligence companies. Additionally, a reduction in capital expenditures within the technology sector is anticipated this year, which could make it even more difficult for companies to sustain the ambitious growth projections they have communicated to investors. Outside of the artificial intelligence sector, several companies experienced significant stock movements driven by earnings results and strategic developments. Warby Parker gained over 2% following the announcement that it will begin selling its eyewear products at select target locations, expanding its retail presence. Rolls-Royce surged by more than 14%, reaching a new all-time high after reporting strong earnings, introducing a stock buyback program, and raising its future financial guidance. Cloud computing company Nutanix climbed over 10% as it benefited from an influx of customers leaving Broadcom due to dissatisfaction with its services. Meanwhile, Mara Holdings, a cryptocurrency mining company, rose by more than 5% despite a decline in Bitcoin prices, as it reported record high revenue and exceeded analyst earnings expectations. While several companies posted strong gains, others faced steep declines due to weaker than expected earnings or unfavorable market conditions. Vital Farms fell over 9% despite surpassing earnings estimates, as investors reacted to concerns over high egg prices. Hormel Foods, which owns brands such as Skippy Peanut Butter and Spam, declined by over 1% after exceeding revenue forecasts but missing profit expectations. C3AI, an enterprise artificial intelligence company, reported a year-over-year revenue increase of 26% but still fell short of analyst projections, causing its stock to drop by over 9%. Moderna declined by more than 7% following reports that the Department of Health and Human Services is reassessing its contract for an avian flu vaccine. In other news, eBay saw its stock decline by over 8% after issuing a weaker than expected revenue forecast for quarter one. The company projected revenue between $2,520 million and $2,560 million, below analyst expectations of $2,590 million. Management cited inflation concerns and the potential impact of President Trump's tariffs as key challenges. However, there was some positive news. Gross merchandise volume increased by 4% to reach $19,300 million. Meanwhile, Warner Bros. Discovery saw its stock rise by nearly 5% despite reporting financial figures that appeared weak at first glance. The company's streaming division was a major bright spot, adding 6,400,000 new subscribers in quarter four, bringing its total subscriber base to 116,900,000. Despite recent volatility in the stock market, investor enthusiasm surrounding artificial intelligence remains strong. Nvidia, Salesforce, and Snowflake continue to be key players in the sector, though challenges such as competition, tariffs, and shifting capital expenditures could create headwinds. Meanwhile, other areas of the market, including luxury goods, cloud computing, and streaming, presented mixed performances. Companies must continue proving their ability to sustain long-term growth in an increasingly demanding environment. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.